Then this brings us to gamma, and this brings us to why they are called gamma level. So gamma is one of the option Greeks, and together with delta, vega, and theta, and gamma is really the measure of the rate of change of an option's delta with respect to the change in price of the underlying, and it's very key in the delta hedging activity of market maker. The overall gamma exposure, and we will always talk about this, is or negative. We always talk about positive or negative gamma. And gamma levels really refers to a specific price point where large options positions are concentrated, and therefore the delta of those options can change significantly when the price of the underlying approaches or crosses this level, right? As there is a lot of heavy gamma, so there's a lot of gamma at this price point, and therefore market makers need to constantly hedge their positions, which affects the price movement of the underlying asset. And why is this important? Because as we explained earlier, market makers are constantly hedging their portfolio by buying and selling the underlying asset. So even if you don't trade options, you still want to know where these flows are going, because those will have effect on your price movement of whatever you trade, whether it's futures, whether it's stocks, whether it's indices, right? And please send questions if you have. We'll get to that. So this brings us to the MenthorQ gamma levels. Those are the ones that you see in the indicator. Those are the ones that you can plot in the chart. This week, we're going to focus on primary and secondary levels. Today, we're going to talk about core resistance. Tomorrow, we're going to talk about put support and so on. But on the left-hand side, you see the primary levels, which are core resistance, put support, IVO level, 1-day max, 1-day minimum. And then we have the 0 DTEs levels, and we're going to talk about them today as well. And then on the right side, you have the secondary level. And secondary level doesn't mean that they are not relevant. It's just that obviously the primary levels have a higher concentration of gamma, so they do have a larger impact. Okay, this is a screenshot from the MenthorQ levels indicators. Again, if you're using TradingView, if you're using NinjaTrader, you will be able to plot these levels directly into the chart, and these levels are coming from the models that we showed you before. So why do we stress about gamma levels, right? So even, and I'm going to try and make an analogy that kind of makes sense. So think about before using liquidity, before using gamma levels, the strategies that are available are technical analysis or fundamental analysis, right? So if we focus on technical analysis, is purely based on price and volume. Great indication of where the price could go, but it's looking at data that is really historical data. So it's you're looking at historical trends and you're trying to predict the future. With gamma levels and with the liquidity analysis and option data, you actually can get an idea of your surrounding. So not only you can see what's directly in front of you, but you can also see where the market could go. What is the target areas that you could aim for? What is the risk that you have? So it gives you like a broader perspective of where the market could be, and it can be used for risk management, for trading. And then Patrick, after you're going to share some example as well. But essentially, we are simplifying this analysis by plotting these levels directly into the chart.